Hey everyone, Tom Parks for Annex Wealth Management's What's That? What is a stock? Simply put, a stock represents ownership in a company. So why is it that whenever people talk about stock investments, they always reference shares of stock? Well, stock companies are generally owned by multiple parties. Each one of those parties owns a certain portion or number of shares in the company. Before we go any further, I think it's also important to note that equity is another word for stock, so I'll be using those interchangeably as I go along. Just as people talk about having equity or ownership in their home, stock owners have equity in the company, just so we're clear on that. Another term you often hear associated with stocks is the stock market, or equities markets. That last one probably makes the most sense because there is more than one market where stocks are bought and sold. The New York Stock Exchange is probably the best known equities market on the planet. The NASDAQ is also a familiar name to most people because a lot of well-known technology stocks are traded on NASDAQ's market. So let's take a quick look at one of those well-known companies to get a sense of what it's like to own stock. Toward the end of 2019, there were approximately 500 million shares of Amazon stock on the market. If you owned a share of Amazon stock, you could tell all of your friends that you literally own the company. It's just that you only own a tiny piece of it. Jeff Bezos, on the other hand, owned just under 80 million of those shares. So while you'd both be owners of the company, he owned a much bigger percentage or share of Amazon than anyone else. Of course, we cannot have a responsible conversation about equities without mentioning the risks associated with investing in the stock market. Don't forget that investing always involves risk, and there are many different types and levels of risk out there. I find that extreme examples do a great job of getting the point across. The best examples that immediately jump to my mind when I think of the stock market risk are WorldCom and Enron. Those of us who are not old enough to remember those companies can Google what happened in those cases. Let's just say neither one of them provided a particularly happy ending for investors. Those companies are poster children for the biggest risk an investor faces in the stock market, which is losing the principal or the money that you invest. Before you let those companies scare you away from stock investing, however, keep in mind that they are extreme examples of market risk. The thing about stocks is that they're always changing in value. If you don't believe me, go to your favorite financial website that shows markets in real time and you'll see exactly what I mean. While there can be a fair amount of volatility during shorter periods of time in the stock market, history has shown that stocks can be a very lucrative place to invest over the long haul, particularly when you are adequately diversified, meaning don't put all your money in one stock. There's obviously only so much ground that can be covered in a short video like this, so let's make sure you do a lot more homework before you put any money to work in the stock market. I always recommend talking to a reputable and trustworthy financial professional before investing your hard-earned dollars. For more videos like this, make sure you check out the Annex Wealth Management YouTube channel for a plethora of educational content. Thanks.